All of the Bitcoin miners out there are using carbon credits to claim carbon neutrality. And everybody knows that carbon credits are bullshit. People talk about Bitcoin, 800 billion. That's nothing. That's nothing in financial services. It's not even a pimple. It's nothing. Bitcoin is a nothing burger. And one of them gave me some advice a few years ago that I think everybody should think about. Most people spend 2/3 of their day talking and 1/3 listening. Reverse that. Shut up and listen. The way you have to look at life is there's people that own the store, and then there's people who scrape the shit off the floor. And you have to decide which one you are. That's sort of the way I looked at it. I'm not dissing being an employee. There's nothing wrong with that. But if you want to have control of your own destiny, there's only one path. You have to be an entrepreneur, and it's not about the greed of money. It's about the pursuit of personal freedom. So one of my businesses that I spend a lot of time on is indexing. And indexing is creating subsets of the S&P for sovereign wealth or pension plans. So let's say you're a country wealthy with oil. You don't need to invest in more oil stocks. So you say to an indexer like me, give me an index of the S&P X energy, X airlines. And we do that. That's what we do. Most sovereign wealth funds and institutions are not permitted to own Bitcoin, but they want to be exposed to the volatility of Bitcoin. So there was a direct correlation at that time with Bitcoin miners and their stock prices, the public miners. So most indexers just basically indexed the public miners in the US, Marathon, Riot, Hut 8, Hive, and it was a direct correlation. And it was working just great until all of a sudden that Larry Fink ESG letter came out.
Yeah.
And then all of a sudden a memorandum from the SEC was issued saying that they're going to demand carbon audits, no different than your financial audits. If you claim carbon neutrality, you have to get an auditor to sign off on that. All of the Bitcoin miners out there are using carbon credits to claim carbon neutrality. And everybody knows that carbon credits are bullshit. And so there's no auditor that is going to sign that. Those stocks got killed. And the reason they got killed was every indexer sold all of them. So one of the largest hydro facilities for Bitcoin mining is being built out right now in northern Norway. We call it the Norway model, where it's 100% excess hydro. And the company built out its own transmission line. So they spent millions building that for the benefit of that community, 3,000 people. The heat off the computers is recaptured and grows hothouse tomatoes. And they built a canning plant so they could store it during the winter. That's the new version of Bitcoin mining. And so my job now is to find senators and governors that have policy in their states and have hydro or nuclear power that are willing to support the Norway model. And those states specifically are Montana, North Dakota, Florida, and Texas, of course. And we're working in all of those jurisdictions. You just saw New York, technically ban Bitcoin mining today. What a waste. They have excess power. They don't understand Bitcoin. It's a political knee-jerk reaction. But we had a project in New York, and we're just taking that capital and those jobs, and we're getting out of there, like everybody else will. Sometimes governments do bad things. They don't know what they're doing. It's sad to see that happen in technology because other states will compete with them, and they will lose all those jobs. I know with certainty, and I'll make a statement now, and I've said it before, that within a decade, crypto and blockchain technology will be the 12th sector of the S&P. Right now there's 11 sectors, it will become the 12th. The only decision any of us as investors have to make now is how much should I allocate to crypto now, and how should I deploy it? How much diversification should I have? So in my head, the big event is going to be policy on crypto. It will open the floodgates to capital from pension and sovereign, which we don't have. People talk about Bitcoin, 800 billion. That's nothing. That's nothing in financial services. It's not even a pimple. It's nothing. Nobody owns it. I mean, yes, there's some high net worth individuals, some hedge funds, and a few retail investors, but Bitcoin is a nothing burger in financial services. However, the potential would be that we do provide regulation, and all of a sudden in a sovereign fund where they might put 1% allocation, but that sovereign fund is $100 billion. That's a small sovereign fund. So I'm investing ahead of that.
Mm-hmm.
I'm making the assumption that if I'm buying in, at 35 to 40,000, that I'll see this at 150, 250,000 one day when it gets allocated and indexed. Because if an indexer says I'm putting 1% allocation, if the coin drops 20%, which is very volatile, they buy back up to 1%.
Yeah.
So you have a bid. They're the bid. They're the market all the time. 24/7, they're the market. We don't have that right now. When you're an indexer, you're constantly creating indices in multiple markets. So let's take Europe. We have an index that is 50 European stocks that is very popular. And so what we try and do is find the best balance sheets. And Europe is basically made up of Switzerland, so the Swiss franc, Europe itself, Germany and France, so that's the euro as a currency, and then the London Stock Exchange, which is in British pounds. Now, let's say you're putting out $100 million index, just for start. You seed an index with $100 million. I have to take the $100 million US dollars, allocate it into 3 different currencies, go through an FX exchange where I get clipped basis points, no value whatsoever, zero value. Buy the stocks on the native exchanges, manage their positions. Usually a mandate like that is no more than 5% in any one stock. So if it doubles in price, you got to sell half of it. Go back from that, Swiss franc back into US dollars, get clipped again, no value whatsoever. I mean, it is such a waste of capital for everybody. It's useless friction. Just focus on stable coins. Just one thing, because the largest market on earth is currency trading.
Yeah.
It's trillions of dollars and it's incredibly inefficient. So their proposal is very simple. Okay, let's audit these stable coins every 30 days, agree to an audit, and also agree that any asset that's backing the coin is no more than 12 months in duration. Very simple mandate. I get it. Everybody gets it. Now, the risk here is if one coin agrees to under that mandate and gets licensed, the others, it's going to be one of these situations. I won't mention any names, but the king may not have any clothes.
Right.
And that's going to be ugly. However, if we can get the legislation through, I could potentially only use one payment system for all of the stocks that I'm buying in all these different currencies. And all of a sudden, the efficiency of that, the billions in savings, it's at our fingertips. So I think the best strategy right now is not to bet the farm on a token or a coin. I like the analogy from the gold rush way back hundreds of years ago, when you would have done better owning the picks and shovels and the jeans that people wore than to try and pick a hole in the ground and mine it. So I'm looking for opportunities. I'm a shareholder in FTX. I have to disclose that. I'm also a paid spokesperson for Sam. Happy to do that. But I also find companies like Immutable Holdings that's doing NFT.com. That's infrastructure. Another one called WonderFi that's buying all the regulated exchanges to service banks, like in countries like Canada. BitZero, we talked about. It's a private company, but I'm 100% behind that for sustainable mining and working with them in all these different state and different countries. It's a very collaborative way of working. And a good example is Ryan, FTX's CEO. He introduced me to the government in Georgia.
Yeah.
And I'm way down the rabbit hole in Georgia now, buying assets in their country, even though it's right beside Russia. The point is, I wouldn't have known about it unless this collaboration existed with other CEOs that are working on this stuff. I'm intrigued. I think infrastructure is the play. Owning a piece of exchanges, you're agnostic to price of coin. Doesn't matter, it goes up or down, you still get paid. So that is what I'm sort of focusing on now. And I do have a big portfolio of 32 other tokens and positions: Polygon, Solana, HBAR, Helium, Avalanche, like all this stuff. Yeah. It's all software. There's no coin, it's just software. So I'm investing in software developers. For some interesting reason, if I look over the last 20 years as an investor, 75% of my returns have come from companies that were run by women, which is really interesting. And so I tend to be biased towards investing in women. And one of them gave me some advice a few years ago that I think everybody should think about. Most people spend 2/3 of their day talking and 1/3 listening. Reverse that. Shut up and listen. And I tried that. One of my great women CEOs told me that. She said, listening gives you information, empowers you, and helps you make better decisions. And she's right. I've turned that around now. I listen 2/3 of the day. I often say nothing, and I learn, and then it helps me make a better decision as an investor. That in itself is a great life lesson.